So let's start with the first lecture for your assignment 2, BTEC Financial Accounting Assignment 2. So before we start discussing your learning outcome 3 or learning outcome 4, have you received the assignment 2?
Yes.
Okay. So in your assignment 2, same like as assignment 1, you will have 2 learning outcomes. So learning outcome 3 and learning outcome 4. So learning outcome 3 is about BRS. BRS stands for Bank Reconciliation Statement. And learning outcome 4 is about control account, especially receivables or payables. Control accounts, right? So you have only one task here. So task 1. And here we will have task 2. So each learning outcome has only one task, right? In task 1, of course, it's all calculation, right? And same thing here. Same as task 1. Same as task 1, you also have a full calculation. So before we start discussing learning outcome 3, so of course we will start with learning outcome 3. Let me give you quick ideas on your assignment so you can understand how many tasks and what questions you have to do in your assignment. So let me show you the assignment. So that's your assignment 2. Yeah, we have to decide the submission deadline. Let's have a look at the assignment first, and then we come to the submission deadline. So your assignments, as I mentioned, you have 2 learning outcome, 3 and 4. So just only one task, which is bank reconciliation process. Right? And second one is the control accounts. And of course, some suspense accounts you have to prepare. What is control accounts, suspense accounts, that I will mention you when I will start discussing learning outcome 4. This is your learning outcome 3. You can call it task 1 or task 4 because assignment 1 you had 3 tasks. So this is task 4. So following assignment 1, this is task 4. So task 4, I guess you have a 6 or 7, I guess. 4, 5, 6, 7. So you have a 7 different questions or 7 different situations. So each situation, each question. So for your bank reconciliation statement, which is your learning outcome 3, you have a 7 different questions. You have to solve all these questions by preparing bank reconciliation statement. This is a learning outcome 3, right? And this is your learning outcome 4, which is task 5. So task 5, you have only one question here, and that's you have to prepare your control accounts and suspense account. Depends what are the requirements. So like here, you are required to balance all the accounts and check that total of balances in subsidiary ledgers agree with the control accounts balance at 31st January 2020. So it means you are mainly focusing on the control accounts and finding whether balances are equal or not. If there is any kinds of difference that we cannot find it, obviously we have to prepare suspense accounts, right? So later on, we will discuss what is the meaning of suspense accounts and what is the meaning of control account, because these two things you never studied before. All right. So this is completely learning outcome 3 and 4 are completely new topic for you. But of course, you have to remember some journal entries, some accounting treatment that you have studied in your final accounts, or you have studied in your journal and ledger. You need to know how journal and ledgers we have to prepare, because task 5, you may have to prepare some ledgers. All right. And maybe you have to recheck some journal entries. The same thing you have to do with the task 4. You may have to prepare some kinds of journal entries. So please remember the ideas and principles and rules, regulations that we have studied in relation of journal entries. Right? So that's your learning outcome 3 and 4. Right? What else? Yes, that's all. Let's discuss about your submission deadline. Your submission deadline will be, let me check. So still we have 6 lectures. Today is 15. So you have still 5 more classes. So 1, 2, 3, 4, 5. So 19th of May, 19th of May or June, sorry, 19th of June. 19th of June will be your last lecture. So it's gonna be like maybe 21st of, not 19th of June, maybe this week, because this week I was busy on Wednesday, and next week I'm also busy on Wednesday, and week later I'm free on Wednesday. So you don't have to study on Saturday every class. So we may switch on Wednesday. I will inform you later, but of course next week still we will study on Saturday, right? So once we move back to our schedule, which is Wednesday afternoon, Wednesday morning, sorry. So I will see Wednesday morning or Wednesday afternoon. So probably Wednesday afternoon online. If no more online universities open, then of course we normally back to our schedule, whatever is scheduled, which is Wednesday morning. All right. If it's not university not open, then I'll teach you Wednesday afternoon. So once we back to our schedule, which is on Wednesday, I may start teaching you 2 classes, so we can finish this subject on time, because we have canceled several classes before because of some holidays, right? So hopefully today is 15, right? So today I'm teaching you on Saturday, and 22nd, I will also teach you on Saturday, and hopefully from this week. So I will move to 26, which is Wednesday afternoon. So from this week onwards, hopefully I can teach you 2 classes, which is 26, 29, 2nd, and 5. So we will finish here. So then still we have time. I can give you 1 more week, and then we can submit assignment on 14. So again, 14 is a tentative deadline. Again, let me write on 14th of June. So it's tentative deadline. It's not confirmed yet. So we will see how we go. So it's not fixed. We can change it. Submission could be 14th June. Do you have any other submission on this day? Do you have any submission, any other assignment submission on the same day, 14th of June? This day or this week? Tell me, do you have any other submission deadline during this week? Of course,
June or July?
It's June. It's June, because as I said, I will hopefully soon, I will start teaching you 2 classes 1 week. So we can easily finish before this time. If I'm not able to finish classes by 14th of June, then of course I will change your submission deadline. Just keep it 14 right now, and then we will see how fast we're going. You understand? Did you understand? Yes or no?
Yes.
Okay. All right. So we submit MO on 14th. What is MO? Managing organization something. You have another submission deadline on 14th. All right. So management and operations. Okay. So anyway, we will see. It's not fixed yet. So just let's keep it. Okay. Let's keep it 14th of June, and then later on we will change it. Right? So maybe a week later or something. So we will change it later. So don't worry. It's not fixed yet. All right. So now let's start with our learning outcome 3. So before we start learning outcome 3, do you have any question? Okay. Yeah, I already received your assignment 1 submission from office. So hopefully next week I will give you result for your assignment 1. So what is bank reconciliation statement? Reconciliation. The meaning of reconciliation means match, compare, reconcile. When you're going to compare the 2 different accounts, this is called reconciliation, right? So you're going to compare 2 different accounts to find the difference. Now, compare which 2 accounts? So before we discussing this reconciliation, we go back to our learning outcome 1. In learning outcome 1, we study about preparing T accounts, right? We study various types of T accounts. And among these T accounts, we study about one T account called cash account, all right? Cash accounts or cash book. Sometimes we call it cash account, and sometimes we call it cash book. Now, who prepare cash accounts? Obviously, company. Company prepare cash accounts, like as what we studied before. We are preparing cash account that looks like T accounts, right? Now, you know that whenever company receive cash, cash debit, and company pay cash, cash out, cash credit, right? So we use this debit and credit to prepare cash accounts. Okay, now, when company receive cash, what do you think? Where company keep that cash? Company keep that cash in company, all right? Company office, or company keep that cash in bank account? What do you think? Where company keep its cash whenever company receive cash from maybe many customers, or many company get money or borrow money from bank. Where company keep that cash? Company keep that cash inside the company as a cash in your office, or company deposit that cash in bank accounts? Tell me, where company keep that cash? Yes, company keep that cash in bank, right? So it means company open bank accounts, right? Company open bank accounts. Company open a bank account. Can you tell me who control these bank accounts? Company control these bank accounts, or bank control these bank accounts? When money in or money out from bank accounts, who make changes in this bank account? Company make these changes, or bank make these changes? Financial department. No, financial department prepare cash account. Financial department of what? Financial department of company prepare cash accounts. Whenever cash in, financial account, financial department or company debit your cash account. When cash out, company credit the cash out, right? Now, company also open bank accounts in the bank. So who control this bank account? Who manage this bank accounts? Company manage, company make changes in this bank accounts, or bank make changes in this bank account? Let me give you another example. If you did not understand, for example, that's you, all right? Now, for example, you receive money. Maybe you're working in a company and you receive money. For example, you receive money in cash, and you also prepare your cash account at home to understand, not literally T accounts. You just write down on the paper or write down in a diary that how much money you're using every month and blah, blah, blah. So this is called the cash accounts, right? That's your cash account, right? And you also open a bank account so you can deposit all money in bank accounts. Time to time, you can withdraw, you can deposit. When you withdraw and deposit money from your bank account, who plus or minus your bank account? You plus and minus, or bank plus and minus on behalf of you? Obviously, bank do that, because you don't have right to go to bank, and you can't go to bank and you open bank computer and you start managing your bank accounts. Can you do that? No, bank is manage your bank account. Manage your bank account means when you deposit money in your bank account. So bank manager increase your bank balance, right? When you withdraw money from bank manager reduce your bank accounts, your bank balance from your bank account. Did you understand that? Okay, so I repeat again. Now, remember, company, so that's company. That's company. Company has right to make changes only in this cash account, in this cash book, because this cash account or cash book prepared by company. Company do not have right to go to bank and make start changes in your bank accounts. You don't have right to do that. You can't go to bank and you ask bank, show me my accounts on your computer. You can't just open bank computer and you start working on that computer to make some changes in your bank account. Of course not. Bank will do that for you. So if money in, bank will make changes in your bank accounts. If money out, bank will make changes in your bank accounts. You can only make changes in your cash account because you prepare. So you have a right to make changes in your cash account. Similarly, bank has a right to make changes in your bank accounts. You can't touch your bank accounts. Touch means you can't make anything changes, whatever you like. Same, bank don't have right to make changes in your cash account because you prepare cash account. So bank can't go to your company and start changes in your bank in your cash account. Same thing, you can't just go to bank and you open your bank accounts in your computer and you start making changes in that one. No, you can't do that. So now, did you understand that? Now you understand the difference between cash accounts and bank accounts. Bank accounts are prepared by bank because you deposit and you withdraw cash in bank. All right. Cash accounts prepared by you in a company because you receive cash from various customers and you pay cash to various customers. So every time you prepare cash accounts. Now, did you understand that? Yes or no? You understand the difference between cash accounts? Okay. Another name, like cash account has another name, is a cash book. Same thing, bank account has another name, call it passbook. So in simple language, passbook prepared by bank, right? Passbook prepared by bank. Cash book or cash accounts prepared by you as a company, as a customer, right? So you prepare your cash accounts, bank prepare passbook. All right. So now, for example, can you tell me the balance of your cash accounts and the balance of your bank accounts should be same or not same? Should be equal or it should not be equal? Or it cannot be equal? For example, your customer give you cash. Your customer give you cash. Your cash account increase, right? What is a journal entry when you receive cash from customer? Cash account debit, account receivable, or customer accounts credit, or sales accounts credit, right? So your cash account increase. What do you do with this cash? You deposit this cash in your bank accounts. So bank accounts increase, right? Same thing. You make a payments to supplier. So what is the journal entry? Let's say you purchase material and you make payments to supplier. So purchase material account debit, cash account credit. So cash will be out from your cash accounts that you study in your journal and ledgers, right? Exactly. If you start making a payments, so your bank accounts also reduce because you're making a payments from the bank. You're making a payments. So your cash account affect, your bank accounts affect. So money out from your bank accounts because you're making a payments to the supplier. So can I say that the balance between cash book and passbook should be equal? Can I say that? Yes or no? The balance between cash book and passbook should be equal, right? Right or wrong? Tell me. Quickly say something. The balance between cash account, cash book, and passbook should be equal or should not be equal. The example I give you. It should be equal, of course. As I said, when you deposit money in your cash account increase. So obviously money in your bank accounts because you deposit that money in bank, right? When you make a payments to supplier, your cash account out means you using your bank to withdraw and make a payments to supplier, right? So the idea is that balance between cash book and passbook should be equal theoretically, as I give you example, right? But practically, in reality, the balance between cash book and passbook not equal. It should be equal. Theoretically, it should be equal, but practically it may not be equal. Why may not be equal? For example, you are preparing cash accounts for the month of January. You're preparing cash accounts for the month of January, from 1st of January to 31st of January, right? For example, you deposit money in bank on 30th of January. You deposit money, you receive money from customer on 30th of January, and you deposit money same day in your bank accounts on 30th of January. Do you think when you deposit money in your bank accounts, it takes time to deposit money in bank accounts? It's not just instantly you deposit and bank will change. I will give example later. So let's say you deposit money in bank on 30th of January, and let's say 31st is Sunday, right? So bank will receive your payments. So means on 30th of January, your cash account increased because you receive money from customers, right? On 30th of January, your cash account increased. But when you deposit money in bank, next day was holiday. So bank did not plus your bank account on the same day because next day is a holiday. Now Monday bank open. Monday bank open means Monday is February. So let's say 1st of February. So on Monday, bank increase your bank accounts by this money. So what does it mean? In January, according to your cash accounts, let's say you have $100. But according to your bank accounts, no cash on this month because cash in same money increase on 1st of February, which is next month, which is next period, not this period. So what does it mean? In January, your cash account and bank account balance is not equal. That's why practically sometime the balance between at the end of the period, the balance between cash account and bank accounts not equal. Did you understand that? Did you understand why balance should be equal? Why it should be equal and why not? It's equal because of this reason, balance is not equal. Yes or no? Until now, did you understand? Is it clear or still unclear? Tell me. Clear? Everybody is clear? Any question until now? Okay. If it's clear, let's move on. So, if balance is not equal, is there any problem if balance is not equal? Yes, there could be a problem if the balance between cash accounts and bank accounts not equal. What is the problem? The problem is, what could be problem? Problem is, if you take example of this, you think you have $100 in your accounts. You think you have $100 in your accounts. in this period. When you go to bank to withdraw money, bank hasn't updated this money. This money, $100, still in the process of transferring in your bank accounts. As I mentioned, it taking 24 hours because the next day is a holiday. It taking 24 hours to transfer this money in your accounts. So you think in your accounts, you have this money, but in reality, that money is still in the process. So that's why it should be equal. If it's not equal, you will be misunderstood that you have that money, but in reality, that's money is not in your bank accounts. If you misunderstood about that your payments, the money that you have, you're gonna have a problem when you're gonna make your investment decisions, because investment decision you require a cash. So you think you have $100 to invest that cash, but when you go to bank, you're gonna withdraw, you have no money because that money is in the process. This is the problem. So that's why in order to solve this problem, we prepare one statement. That statement called BRS, which stands for Bank Reconciliation Statement. So what is Bank Reconciliation Statement? What is the meaning of Bank Reconciliation Statement? Bank Reconciliation Statement is a statement that we prepare to compare our cash accounts with bank accounts. If the balance is not equal between cash accounts and bank accounts, we're gonna make some changes in our bank reconciliation statement to make balance equal. Something wrong, something mistake we have. All right, there are some reasons. I give you a very small example of these reasons to understand why the balance between cash book and passbook is not equal. All right, so that's why we have to prepare bank reconciliation statement. Now, what is the meaning of bank reconciliation statement? So bank reconciliation statement is the statement which helps to make balance equal between cash book and passbook. So with the help of bank reconciliation statement, we can understand whether the balance between this passbook and cash book is same or not. If it's not, then how much is the difference? So bank reconciliation statement also help us to find the difference, of course, find the how much difference between cash book and passbook. That's what we can also do with the help of bank reconciliation statement. All right. So that is BRS. That's the meaning of BRS. That's why we have to prepare BRS. Is that okay? Is that fine? Okay, so let's move on to the next. As I mentioned, help us to make balance equal, right? Help us to make balance equal. But now the question is, as I mentioned here, now the question is, why the balance between cash book and passbook is not equal. What is the reason? The balance between cash book and passbook is not equal. Theoretically, it should be equal. I receive cash, cash account increased. I deposit money in bank accounts, bank account increased. Theoretically, should be equal. But practically, it's not equal. Why it's not equal? Why the balance between cash book and passbook is not equal? I just give you example. About 30th of January, you deposit cash and the cash transfer on 1st of January. This is very quick examples to understand that why balance is not equal. But now we're gonna understand this why balance not equal in very detail. So why that balance is not equal? There are two reasons. There are two reasons to understand that why balance between cash book and passbook is not equal. Which two reasons? The first reason is a time difference. Time difference. Time difference means the time you deposit and the time bank receive your deposit. The time you enter money in your bank accounts and the time bank accept your amounts, like as the example I gave you. This is called the time difference. So now obviously when there is a difference between you depositing and bank receiving is different, then balance cannot, the amounts at the same time cannot be equal in both cash account and and bank account, right? So first reason is the time difference. Time difference, we have various other examples of time difference, around 6 to 7 examples in relation of time difference. So later on, we will discuss the 6 to 7 differences about time difference, all right? Second reason for this difference is your error. Error made by either bank or cash. Error made by bank or made by company. Anybody is making mistakes, obviously balance cannot be equal. All right. So let's say you think you are depositing $100, but by mistake you write $1,000, or you are depositing 79, but by mistake you write 97. Like you switch the numbers. So this is called the human errors, inherent mistakes. Right? So if you are making such kinds of errors, recording the numbers, then obviously time can the amounts cannot be different. Amounts cannot be same. It will be different. Exactly those kinds of error could be made by bank. Anybody can make errors, right? So if error made by either company or bank lead to difference between cash accounts and bank accounts, all right? So what we're gonna do in this topic, so we're gonna do 3 things here. So we will study 3 things here. First of all, we will study find the errors. We will find what are the errors. No, sorry, find the errors. So if we talk about the time difference, first of all, we will find the problems. What is the problem or situation? What is the problem and what is the situation? Second thing, solve the problem. Solve it. We find what is the problem, why balance is not equal, because of these reasons. Let's say you deposit right now, but bank hasn't accepted right now. So that's the problem. That's the situation which lead to the difference between cash book and passbook. Second step is solve it. So now there is a difference. How can we solve these problems? So second thing, we're going to solve it. So I'll teach you how to solve it. And the third thing is we prepare bank reconciliation statement by solving these problems. All right, finally, we will prepare bank reconciliation statement. With the help of bank reconciliation statement, we can actually find out how much is the actual balance either in your bank accounts or in your cash account. All right, so not the balance you think you have. So that's why when you are preparing bank reconciliation statement, with the help of bank reconciliation statement, you can really understand how much money is in your bank account. All right, not you simply looking at the cash account. All right, cash account is just an idea, but obviously, practically the cash account balance and bank accounts balance must be equal. So in order to understand how much is actual money I have in my bank account, we are preparing a bank reconciliation statement to check whether balance is equal or not. If it's equal, that's fine, right? If it's not equal, then we can understand through the bank reconciliation statement. So that's what we're going to do in this topic. So any question? No question. So let's move on to the next, which is the problem. So of course, we start with the time difference, right? So bank reconciliation statement. So we discuss about the time difference. So in this time difference, as I mentioned, we're gonna look at some examples, 6 or 7 examples to find that how time difference affect the balance between cash book and the passbook. All right. So the first time difference is, okay, do you know what is the meaning of check? Do you know check? Do you know what is the meaning of check? Say something. Do you have any idea what is the meaning of check? You don't know check? Check is a piece of paper that's basically used to make payments to suppliers, to make a payment to someone else. All right. So it's just a piece of paper. It's look like this rectangle shape. And on the top, they write the name of bank, let's say ABC Bank. And that's pay to. You see that on the movies, yes. So pay to, and you write down the amounts, how much. All right. And of course, some amounts in numbers here, you fill that amounts, and then here is your check number. all right, and then later on you sign here, whoever you sign here. So that's basically the piece of paper that we use it to make a payments to someone else. That's the meaning of checks. All right. So exactly, some other people also use the check to make a payments too. So maybe you can receive a check from your customers, and account receivable will give you money. And of course, account receivable not going to give you cash. So account receivable will give you check. So for example, this is you. That's company. All right. And that is your, so let's say that's company. Maybe that's you as a company, all right? And that's account receivable, all right? So account receivable has a bank. Bank name is ABC. That's account receivable bank. And your bank accounts, your bank name is XYZ, right? So when account receivable will make you payments, account receivable will use this check. Account receivable will use this check. So account receivable will give you check. Of course, account receivable gonna write down the money. How much? Let's say $10,000. Right, so write $10,000 here. And account receivable will give you check. Now you receive this check. After you receiving this check, you will go to your bank, not account receivable bank. You go to your bank and you give this check. You give this check to your bank. Now your bank will contact to this bank. Your bank will contact to this bank to ask to transfer money from this person bank accounts to your bank accounts. So this person, this bank, ABC Bank, will see the check because they're going to send this check. They check they look at the check and they open the bank accounts of this person. So ABC Bank will open the bank account of this person and transfer money to your accounts, right? Transfer money to your accounts, which is $10,000. So this is basically the process to receiving check. Exactly same thing happen when you're gonna make a payment. So let's say you are making a payments to accounts payable. And of course, you are writing a check to accounts payable. And accounts payable will go to its bank. And accounts payable bank will contact to your bank. And then your bank will transfer money from your accounts to accounts payable bank accounts. Did you understand that? Did you understand how check works? That's very simple procedure to understand what is the meaning of check and how check works. All right. But nowadays, maybe it's transferring through the bank accounts, but still check are quite convenient, because sometimes when you're transferring money from online, of course, you have to pay some kind of fee, right? So in checks, you may not have to pay some fee. Your bank will give you checkbook. So you can use the checkbook to write to the check to whoever you like, right? You can write the amount or whatever and sign and everything you give. Then another person can receive that check to make a payment. So let me send you this file. So now that is the meaning of check. Now let's move on to next. The first time difference. So first time difference is check issued, but not presented for payments. right? Check issued but not presented for payment. Now, what is the meaning of check issued but not presented for payments? Now, check issued means when company paying a check, when company writing a check. Issued means when you pay check. Paycheck. Paycheck means, of course, you pay money. I need to give you money, so I'll issue you check. All right. So now what you will do, you will go to your bank accounts. You will go to your bank and you give this check to your bank. Remember, you go to your bank, not my bank, because your bank will put this check in your bank accounts. Put this check in your bank account means the process is your bank will contact to my bank and my bank will transfer money from my bank to your bank, my bank accounts to your bank account. You understand that? So that's the meaning of check issue, right? So check issued but not presented for payments. It means today I am giving you check, and today, same day, maybe you go to your bank to give that check. Do you think if you will give that check to your bank and your bank will contact to my bank and then my bank will transfer money to your bank, do you think all these things happen in one day? All these things happen will today? Do you think so? I repeat, I give you check. I'm a company, you're a supplier. I purchase raw material from you. I'm giving you check, right? It means I'm giving you money. So you receive the check. Then you will go to your bank. You give that check to your bank today, same day. And your bank will contact to my bank. And my bank will take money from my bank accounts, will transfer money to your bank. And your bank will receive money and then transfer this money in your bank account. Then you receive money. Do you think all these things happen within 24 hours or in one day or at the same time? Yes or no? No, never. It takes time. Generally, this check system take 2 days to 3 days. We call it T2 to T3. T2 means transaction to transaction 3. So mean day 2 to day 3, 2 to 3 days it takes, but at least one day. It's not going to happen within minutes or within hours. It takes time. It's a time-consuming process. So now the problem is, so this is your cash book and passbook. So check issue, cash book means company. Check issue, company paying check. So means money out. Some money, whatever is money, minus. Your cash book minus. Because when you make a payments to supplier, what journal entry you're going to write when you make a payments to supplier? Accounts payable, account debit, and cash account credit, right? That's the way that you make a payments to supplier, right? So cash account debit. So your assumption is that money is going out from your business. So that's why you're writing cash account credit. So it means your cash book credit, right? Your money out. But bank will not, but money will not be out from your bank accounts right now. As I said, it's a time-consuming process. So today means same time. Your cash book, money out. But your passbook, no change. No change means money not out from your bank account. Bank did not minus money. Only cash book minus. Passbook not minus. Because as I said, it takes 2 to 3 days. After 2 to 3 days, your passbook balance will be minus, but not today, not same time. So that's the meaning of time difference. If money out from your cash book, but passbook, no out, no change. balance will be unequal. That's the first reason for the time difference, which lead to make difference between cash book balance and the passbook balance. Understand? Yes or no? Is that clear? Okay. So this is the first time difference. So now we can have a break. And after break, we will continue to next, number 2, next time difference. So before we go for break, anybody has any question? Any question before break? No questions. All right, so we stop here for break, and I'll see you after break. Thank you. Now let's move on to the next difference. So the first that we already studied, which was a check issued but not presented for payments. Now the second time difference is check received but not collected by bank. All right, check received but not collected by bank. Now what does it mean? It's opposite of check issued. Check received means money in. So money in, but at the same time, money will not be entered in your bank accounts because of the procedure. Exactly, I explained you before. So for example, you are a company, so that's you are a company, right? And that's your accounts receivable, all right? Account receivable giving you a check, all right? Now you will go to your bank. You will go to your bank, and now your bank you will send this check to your bank, and now your bank will contact to your customer bank, and after contacting your customer bank, and then customer banks will transfer money from customer bank accounts to your bank accounts. This procedure indicate that check received. So check received means that's you are preparing cash book. You means company is preparing cash book, and your bank is preparing your passbook. So you receive a cash, not cash money. You receive money from account receivable. What is the journal entry? Cash account debit, account receivable, or customer accounts credit. All right. So your cash account increase. But as I said, it takes maybe 2 to 3 days, not exactly the same time. So as a result, your passbook is no change. There's no any change in a passbook. As a result, your balance will be unequal. All right, so that's the meaning of check received, but not collected by bank. Passbook not affected. Balance will be unequal. All right, is that okay? Is that fine? Can we move on to next? Tell me, can we move on to next? Or any question? Okay, so let's move on to the third time difference that lead to balance unequal between cash book and passbook. So next is direct debit made by bank. So let me write down first. Direct debit made by bank. Made by bank. Now, before I explain you this time difference, direct debit made by bank, let me explain you something which is about debit and credit, and you have to remember that. All right. So always remember, according to cash book, if cash in, we call it debit, cash debit. All right. If cash out, cash credit, according to cash book. But according to passbook, according to bank, cash in, we call it credit. Always remember. And cash out from your bank account, so your bank account will be debit. Always remember. So have you ever heard in our general life, or probably in a business language, we always say that money has been credited in bank accounts. Money has been credited in bank accounts, means money in bank accounts. Money is debited from bank accounts, so means money is out from bank accounts. So always remember, if I say debit by bank, so means money out from your passbook. Remember that. It's the opposite of your cash book. I repeat, cash book, debit means increase, cash increase, and credit means cash decrease, that we exactly used to do when we were doing our journal entry in our learning outcome 1, right? But passbook, it's opposite. If passbook or bank accounts credit, means money in increase, all right? If passbook or bank accounts debit, which means money out. So this lesson is very important for your bank reconciliation statement, because sometimes, as you can see, your third reason for time difference, which is direct debit made by bank. So means bank debit your bank accounts. Of course, you can't touch your bank. Who will make changes in your bank accounts? So obviously, bank will make changes in your bank accounts, as I explained you before, because bank prepare your bank accounts, bank prepare your passbook, right? So if question says debit made by bank, means money out. Debit made by bank, money out. Credit made by bank means money in. Remember that, right? So now, it's a direct debit. Direct debit means directly money out from your bank accounts. Maybe interest, or maybe some other kinds of expenses. Let's say, for example, ATM fee. For example, we are using an ATM from bank, and you know that bank gonna charge some account maintenance fee or ATM fee from your accounts every year. So minus some money from your accounts because you're using bank service. So bank charge some service for you. This is also called bank charges. Bank is providing you services. So sometimes bank directly minus amount from your bank accounts. Directly debit means only bank is doing that. You have no idea. You have idea at the end of the year when you open your passbook, when you open your bank accounts, then you can see that. And of course, bank will credit money from your account, but now we have a mobile banking. Sometimes we have an SMS, but generally it's an old system. So we have a cash book and we have a passbook. Direct debit made by bank means money out from your bank, and it's a direct means cash book, you don't know, because it's a direct means directly minus from your bank accounts without letting you know, because it's a bank charges. You will understand at the end of the period, but at the time you open bank accounts, may bank already inform you such kinds of expenses, but before the minus, bank not going to call you, because when you open your bank accounts, you sign on the documents with all the conditions that bank already apply on you when you open your bank account. All right. So if bank is making direct debit in your bank accounts, that will be balance will not be equal, because passbook balance reduced, but cash book you don't know. So balance will not be reduced. Balance will be imbalance. All right. Next is number 4. Okay. Now, next, number 4 is amount directly credited in bank account. What does it mean? It's exactly opposite of your third time difference. Third was direct debit made by bank, means money directly out from your bank accounts. Here, amount directly credited in your bank accounts. Credit bank accounts means, you can see here, debit means minus, credit means plus. So means money directly deposit in your bank accounts. Maybe some of your customer directly make a bank transfer in your accounts. Or for example, another example is you have some deposit some money in your bank accounts and you receive interest. When you receive interest, bank will directly deposit interest in your bank account, because bank is holding your cash. Bank is have your cash, and time to time, if you keep cash in the bank accounts, bank give you interest. So when you receive interest from bank, that interest will be directly debit. Bank not gonna come to your company and not gonna give you cash. Bank will credit that interest in your bank accounts. That's called the amount directly debit credit in bank accounts. Another example is dividend. Sometimes when company pay dividend to their shareholders, their investor, company directly credit amounts, or company directly deposit amounts of dividend in the shareholders' bank accounts. Exactly same thing happen. If another company where you have invested money, if they're gonna deposit money, if they're gonna deposit dividend directly in your bank accounts, so this is the example of amount directly credit in bank accounts. So you have a cash book, you have a passbook, all right? So amount directly credit. Directly credit means your bank accounts money increase because they're direct credit. But in cash book, you don't know, or no change. As a result, the balance between cash book and passbook will be unequal. So that is the 4th reason of your time difference. Is that okay? Number 4. Is that fine, number 4? Can we move on to next? Okay. Next is maybe the last reason for time difference. So next, number 5. Number 5, time difference. Reason is check dishonored. Check this. Check dishonor. Now, what does it mean? Check dishonor. Sometimes we call it check dishonor, or we call it check bounced. Bounce back. Bounce back means you, for example, you deposit that check in a bank, and bank will bounce back to you. Bank will give you back. For example, I receive a check from the account receivable. Account receivable is my customer. My customer give me check. I deposit this check in bank. So when bank will return that check back to me, that's called check bounced, check dishonored. But now the question is, why bank will return that check to me? Why bank do not contact to the other banks, and why not money comes in my bank accounts? That normally happen. That's what we have studied in our previous time differences. All right. So now what does it mean, check dishonored or check bounced? When your deposited check returned by your bank. When your deposited check returned by your bank, that's called check bounced or check dishonored. Now the question is, why? Why it's happened? Why whatever check you have deposited in your bank accounts, why your bank will return that check back to you? So let's understand this one by using an example. So let's say this is a company, all right? That's the company, and that's company bank, all right? And that is customer, right? And that's customer bank, all right? For example, this customer give you a check, and check value is, for example, $1,000. Account receivable, give you check. Now you deposit this check to your bank. Now your bank will contact to your account receivable bank, all right? So accounts, bank accounts, right? So now what account receivable bank will do? How much your bank ask account receivable bank to transfer $1,000 in your bank accounts, right? So now your account receivable bank will check account receivable bank accounts. Account receivable bank account will check your account. Check account means check how much money do you have in this bank. Do you have enough $1,000 to transfer or not? That's normally bank do. So let's say in this account receivable bank account, let's say this account receivable has only $900 in your bank account, but you are writing a check for 1,000. So you do not have enough money to transfer. Check says transfer 1,000. But when this bank check account receivable bank accounts, it shows only $900 balance. So not enough. Now account receivable bank account will return will return this check, which is $1,000. Return check. Return check, not return money. Again, because money is not enough. So bank not going to pay that money from its pocket. Of course not. Bank will transfer whatever is in your bank accounts. So now, and then your bank will return that check back to you. And then again, you will contact and you will ask that why it's like this. All right. So now, always remember, if your check is bounced, check is dishonored, you have to pay. Means company has to pay some fee. Company has to pay some fee to bank, because bank providing services to you to receive check, and bank was hoping to get money, but bank is not getting anything. So bank is simply providing service without receiving any cash. So bank gonna charge that fee from you. Means you did not receive anything. In fact, you are paying some money to bank for no reasons. And who has a mistake? Who made mistake? This is account receivable mistake. Why account receivable mistake? Because account receivable know very well how much money is in bank accounts. Account receivable know that I have only $900. Then why account receivable is still writing a check? Account receivable know that. But why account receivable is still doing that? In order to avoid you for a few days. For example, I am account receivable and you are a company and you keep asking me, pay me money, pay me money. I said, okay, I'll pay you tomorrow. I'll pay you tomorrow. Every day you call me. All right. So I really stress out. I said, okay, take your check and go and don't call me again. All right. And now you relax. But I know that I do not have enough money, but still I'm writing a check because I'm so tired from you. I keep asking. I said, okay, just I'm giving you check at least few days. You're not gonna come back and ask money. Or maybe when I'm writing a check to you, I know that I have a $900, but I am hoping that by the time you deposit the check in the bank account, I receive money from someone else, because I'm also waiting money to receive from my customer. So I'm hoping by the time you go to bank, you deposit check in a bank, your bank will contact to my bank. By that time, money will be in my account. So I'm hoping another, let's say $1,000. So I hope when my bank will contact to your bank, at that time I have a $1,900. So I can easily, my bank can easily transfer $1,000 to you. That's what I have idea. But sometimes things doesn't happen as we plan. All right. So as a result, check will be dishonored. All right. Generally, in some countries, or I guess in majority of country, this check dishonored, it's a crime. It's a civil crime. Right. So you have to pay penalties for it, even though in some country it's a criminal act. Sometimes you have to go to jail for these kinds of unethical behavior. So company has to be careful before writing any check. I repeat, it's a crime. This is called corporate crime. All right. So it's a corporate crime. If you are doing bad things, you know that in my accounts, I have only $900, but still I'm writing check to you. So it means I am conducting a crime. So it means maybe I have to go to jail, not penalties. It may not be the civil crime where you pay penalties and you release. No, penalties plus you have to go to jail, because you are conducting crime purposely, intentionally. You know very well, but still you're doing that. So obviously you don't want to pay my money. You're just avoiding me for short period. So that kind of avoidance lead to some serious crime. All right. So that's why check dishonored or check bounced. So most of company, they normally don't do that. Whenever they're gonna write a check, or they carefully check their bank accounts before they issue any check to any other suppliers or any other person. All right. So now what will happen in check dishonored? So cash book and passbook. So you receive a check. So you receive a check, obviously you're cash in. All right, you receive a check, you're cash in. But this check dishonored. Dishonored. As a result, your bank account has no change. You think money in, but your bank do not receive that money because your account receivable bank do not transfer because they don't have money. Right? As a result, balance will be unequal. All right. So that was the last time difference. All right. That was the last time difference we had. DP means deposit. So you receive a check and then you deposit this check to your bank, and your bank will contact to your account receivable bank, and your account receivable bank will check account receivable bank accounts enough 1,000 or not. If it's not, then they will return, your account receivable bank will return this $1,000 check back to your bank, and your bank will contact you, and at the same time your bank also going to charge some fee from you because it's not a free service. You have to pay that service charges or bank charges, whatever you want to call it. So it means you did not receive money, but you are paying to bank for no reasons. So you're not going to be happy. So you're going to be really angry on your account receivable, and you may take some legal actions for that unethical behavior by your account receivable. Right? So that is the time difference. So let me send you this file. All right, so that's all about time difference.